to the big IPO news that's coming in on Lenskart. Piyush Bansal, CMD and CEO, and Abhishek Gupta, who's the CFO of Lenskart, spoke to ET now. Let's go across and listen to what they had to say. They are aiming for 100 million eye sets in this year itself. But what's more, and what's the growth roadmap ahead for the company? Let's listen in.
Firstly, gentlemen, many congratulations. It's a proud Made in India story. It's also a massive size that now you have grown to. So let me take out a minute or so to congratulate you and tell you that been standing on the sidelines and watching this story unfold has been a privilege.
Thank you, Harsh, and congratulations to you too.
Well, Piyush, let me first start with you, right? Take us through the journey and take us maybe at the start. Give us a bit of a refresher. How you started off, what was the thought process then? And how has the journey really evolved in terms of how has the company now evolved in terms of what you all do today? The entire manufacturing setup, etc. It's so different from how you envisaged it. Give us a bit of a refresher on that first to start with.
See, we started purely out of just a few things coming together. I think the idea was always to bring a transformation using technology. I think the journey started when I was in Microsoft and I happened to meet Bill Gates, and Bill at those days was trying to eradicate malaria, and I was very inspired by him and I wanted to do something very transformative, and that is when we stuck upon this problem of vision correction. We have almost about 700 million plus people in India who need glasses. Roughly about 35% of them have access to any form of visual correction. And so the gap is very wide, and I think it started with me reading an article which said India is the blind capital of the world. And then it's been a decade of just trying to stay in course and figuring out what are the big bottlenecks. And one thing that we realize is one of the biggest bottlenecks in this category is the complexity of the supply chain, because glasses is a custom manufactured product. It is not a pick, pack, ship product. So when accessibility and affordability was coming to every other category, glasses kind of got missed out. And at Lenskart, I think we have been trying to use technology to figure out can we really build the supply chain in a way that it is scalable. So over the years, we have now come up with a model where glasses, when you place an order in any part of India or even outside, are centrally designed, manufactured just in time. You place an order in more than 40 cities now in India, and within a few minutes, we would pick up the frame in the center, we would manufacture the lenses just in time, we would fit the lenses, and a spectacle would be out there to be delivered next day. I think we are still very early, I would say, in that journey, because we served maybe about 22-23 million pairs last year. We are talking about more than 500 million people being vision deficit in India alone. So we have a long way to go. And I think the path is right now, how do we really do more eye tests?
Interesting. And Piyush, let me stick with you. One more question to you. 2,000 stores plus, you have around 2,000 stores plus in India, 600 plus, 650 plus. When I add, then we arrive at the total store count of around 2,700 odd stores. How many of these are under the FOFO, which is franchisee owned, franchisee operated? The many are under the COCO model? And tell us how this has evolved, because now you're majorly focusing on COCO. What's led to that? A little bit on the business, therefore, on the distribution front.
Overall, I would say more than 80% of these are company-owned stores, both in India and international. And when we started the journey, initially, I think a lot of, we were largely a supply chain and an online company. And when we started the journey, we were learning retail. We had a lot of partners that had support us. Over the years, we continue to work with many partners still. We have over 300 plus franchisee stores. But at the same time, I think the rate at which we wanted to expand and the innovation that we continuously want to do in the store, and the payback that we were able to achieve in the store, it was quite reasonable to open stores ourselves, and we were able to do a good job of continuous customer experience improvement by doing it ourselves. And when we went to international, I think the idea was that let's put our own skin in the game and understand that market. And of course, we did not want a franchisee to invest before we were sure of the market. But yeah, overall, I would say we now have, using technology, built systems that we can run these stores remotely with high amount of consistency that we can operate by ourselves.
Abhishek, hi. So coming to you've got nearly 1,000 crore in cash lying in your balance sheet at the end of June 2025. You are looking at another 2,200 crore being added to that, and you're profitable. So give us a sense, where does this money go? 3,500 odd crore rupees. How do you plan to utilize all of this, and how quickly?
Thank you, Harsh. Like you pointed out, the business is actually generating cash and is free cash flow positive. But at the same time, we are very early in the journey. So we will be investing in manufacturing. We will be investing in expanding our reach in all channels, building our brand, and also technology. So these are the 4 areas where a lot of our investments will be going into.
Okay, and you're at 2,000 stores currently, right? Domestically at least, and you're at 650 plus stores globally outside of India. So your total store count is around 2,700. Talk to us about how many of them are under the FOFO, which is the franchisee-owned, franchisee-operated model, and what's under the COCO model. Give us that sense, which is company-owned, company-operated. What's the breakup?
Yeah, so out of the 2,150, there is for store capex and store payments. That is a majority of the payment, and then there is branding and technology, and then 35% is reserved for general corporate purposes and unidentified inorganic.
I think as a journey at Lenskart, I think we are still quite early in the journey. I know we are hitting the public market, but nowhere this category right now is at a stage where one would assume that we have kind of arrived. I think it is quite early in the journey. Lenskart's market share in India is still 5 to 6%. The market is growing at 13% odd. The number of people needing glasses are growing. Number of eye tests are growing. So it is quite early in that journey, considering, and that is why the investment we are raising in the IPO.
And Piyush, therefore, how should one look at Lenskart? Talk to us as you would talk to an investor. Now, this is fascinating because I now sit on the side of the sharks, right? So give us a sense. How should we look at Lenskart? Is it largely going to be focused on growth? Is it going to be more focused on profitable growth? How should one look at it?
See, firstly, growth is usually profitable if you are, at least in the long term, if you are creating value for the customer. And I think at Lenskart, we believe in the thought process of creating 10x value. We don't like incremental value. When it comes to Lenskart, we have been very particular that the product quality, the product price to the customer both come together, and that total customer experience package creates a 10x, a 10x value for the customer, not an incremental value. So I think our focus is going to continue to give surprising experience to the customer. From a shark perspective, if I was pitching this on Shark Tank, I would say, this would be an investment into a mission to give vision to 1 billion people. We have only served a few million people right now. We believe that we have the intent, the commitment, the talent, and the culture, and investments in technology, which we'll continue to make to eradicate visual impairment like we did polio many years back. And so if please be part of that journey in helping us make the world a better place.
And Harsh, if you think about the business, right, it is the unit economics, the payback periods that are basically the soul of the business. So in that sense, the growth and profitability for us is positively correlated, right? So it is not a either or question. They are positively correlated.
Right, and therefore, Abhishek, does profitability continue to pick up as revenue continues to scale higher and higher? And I'm not trying to allude to the fact that there has to be, I'm just saying that there has to be a positive correlation to it. Is that the way one looks at it?
Yes, I think you have factors like economies of scale, you have operating leverage, you get marketing efficiencies. So all of these are naturally accretive to the overall margin profile of the company. Yeah.
And also, Abhishek, this is a low repeat industry, right? So you've traditionally had higher customer acquisition costs, which you've upfronted now. It's a slightly low repeat industry compared to, say, for example, your other peers, which are platform companies, pure play. Does that at all change the way you look at the business from it being a pure tech business, just given that it's low repeat on a single customer?
So it is not as low repeat as we could think that it is, right? So I'll give you some numbers. If we look at maybe 15 years ago, people were buying 0.8 eyewear units over a period of 2 years, right? And now last year, people were buying about 1.8 units of eyewear every 2 years. And for Lenskart, that average is 3.6 units over a 2-year period. So what is happening is this category is moving from phobia to functionality and functionality to fashion. That's one. Second, half of our customer base actually comes from repeat customers, and we continue to acquire new customers. And since we do a lot of pull-based and brand-based, communication, our customer acquisition costs are pretty low.
The largely majority of the customers coming to Lenskart are word of mouth. I think brand is more of advertising is a smaller percentage just to keep the salience.
Sure. Okay, point taken. And Piyush, you've rethought manufacturing, right? Especially in the eyewear industry. What next for you? What else can you disrupt within?
Right now, what we are trying to disrupt is how to get to 100 million eye tests a year. I think we did about 6 million in FY23. We did about 16 million FY25. In Q1, we are above, again, 50% growth in number of eye tests. And I think that's what our North metric is. We want to compound our eye tests because that's the top of the funnel for solving this problem.
Right, that's the management of Lenskart, the IPO that's about to hit the street and open for subscription from the 31st of October to 4th of November, and it's an issue size of a massive 7,278 crore rupees. But with that, it's curtains done on this edition of Startup Central. I'll take your leave. Thank you so much for tuning in.